These are the top 10 highest returning ETFs for the year so far on the ASX. I use the ETF Screener feature from CommSec to find these results. It can be found under Quotes and Research, Tools, and then ETF Screener. I also chose ETFs with a large market cap to filter away all the small, super niche ETFs. These results were as of Friday, the 11th of November 2022, and they could have changed since uploading this video. So here is what came out as the top 10 when I sorted the results from year-to-date return. And I will chat about each of these separately. And of course, I must mention that past performance does not guarantee future performance. First up is Fuel, which is a BetaShares Global Energy Companies ETF. It has a management fee of 0.57% and the year-to-date return was 43.23%. This ETF is comprised of the largest global energy companies excluding Australia and is hedged in Australian dollars. The top 5 holdings are ExxonMobil, the Chevron Corp, Shell plc, and I don't even know how to say that one, ConocoPhillips, and Total Energies SE at 5.80%. 1 year doesn't give us much of a picture, so I decided to use ShareSite to see what the return was over a longer period of time. I could only do 5 years as some of these ETFs haven't been around for longer than that. I use the Share Checker tool, which is my favorite part of ShareSite, and it can be used with the free version. So over the past 5 years, the return for Fuel has been 4.34% per annum, which was split between capital gains and dividends. And ShareSite is the portfolio tracking tool that I use and love. And if you do decide to sign up using my code, you do get 4 months free with the annual premium plan. And as I mentioned earlier, there is a free plan if you have under 10 holdings, and I use that for many years. Okay, so in at number 2 spot is MVR, which is Vanex Resources ETF. It has a management fee of 0.35% and the year-to-date return was 11.65%. This ETF tracks the performance of the largest and most liquid ASX listed companies that generate at least 50% of their revenue or assets from the Australian resources sector. And the top 5 holdings are BHP Group at 8.2%, then Woodside Energy, Rio Tinto, Fortescue Metals, and then Pilbara Minerals at 5.12%. The 5-year return for MVR has been 13.77% per annum, which was made up of more capital growth than dividends. Next is ZYUS, which is Global's S&P 500 High Yield Low Volatility ETF, and it has a management fee of 0.35% and a year-to-date return of 10.52%. This ETF tracks the performance of the S&P 500 Low Volatility High Dividend Index. And the top 5 holdings are Altria Group at 3.05%, then AT&T, Kinder Morgan, Gilead Sciences, and then Iron Mountain at 2.56%. And in the past 5 years, the return for ZYUS has been 7.02%, which was made up of more dividends than capital growth. And now time for my disclaimer. This information is for entertainment and general information. It's not financial advice. It's factual information about the return of ETFs. You can read my full disclaimer in the description box below. Then we have QRE, which is BetaShares Australian Resources Sector ETF, and it has a management fee of 0.34% and a year-to-date return of 8.49%. This ETF tracks the performance of an index that provides exposure to the largest companies in the resources sector listed on the ASX. And the top 5 holdings are BHP Group at 36.6%, then Woodside Energy, Rio Tinto, Fortescue Metals, and then Santos at 4.30%. And the 5-year return for QRE has been 14.48% per annum, which was split between capital gains and dividends. Next is OZR, which is Spider's ASX 200 Resources ETF. It has a management fee of 0.34% and a year-to-date return of 8.38%. This ETF seeks to closely track the returns of the S&P ASX 200 Resources Index, and the top 5 holdings are quite similar to QRE. And the 5-year return is also quite similar as well at 14.26%, which was again split between dividends and capital growth. And number 6 is NDIA, which is Global's India Nifty 50 ETF. It has a management fee of 0.69% and a year-to-date return of 6.13%. This ETF seeks to provide investment results that correspond to the price and yield performance of the NSE Nifty 50 index. And the top 5 holdings are Reliance Industries at 11.18%, HDFC Bank, then ICICI Bank, I think that's what it is, and then Infosys, and then Housing Development Finance at 5.72%. And the 5-year return for NDIA was 8.36% per annum, which was mostly capital growth. And of course, if you are enjoying this video so far, don't forget to give it a thumbs up because it really does help to support my channel. And then we have INCM, which is BetaShares Global Income Leaders ETF, and it has a management fee of 0.39% and a year-to-date return of 5.76%. This ETF comprises 100 high-yielding global companies, excluding Australia, selected for their potential to generate attractive and sustainable income. And the top 5 holdings are Annaly Capital Management at 3.1%, AT&T, then Ruth Capital Corporation, then Altria Group, and then New York Community Bank Corp at 1.9%. And the 5-year return for INCM was 4.76% per annum, which was made up of more dividends than capital growth. And coming in at number 8 was VHY, which is Vanguard's Australian Shares High Yield ETF. And it has a management fee of 0.25% and the year-to-date return was 4.05%. This ETF seeks to track the return of the Australian High Dividend Yield Index. And the top 5 holdings are BHP Group at 9.63%, then CBA, NAB, Woodside Energy, and then Westpac Bank at 6.07%. And the 5-year return was 7.73% per annum, which was made up of mostly dividends. And next we have IXJ, which is iShares Global Healthcare ETF. It has a management fee of 0.47% and the year-to-date return was 3.72%. This ETF tracks the performance of global biotech, healthcare, medical equipment, and pharma companies. And the top 5 holdings were United Health at 7.30%, Johnson & Johnson, Eli Lilly, and then AbbVie, if that's how you say it, at 3.79%. And then the 5-year return for IXJ was 13.12% per annum, which was made up of mostly capital growth. And now we have VVLU, which is Vanguard's Global Value Equity Active ETF. It uses a quantitative model to evaluate large, mid, and small cap equity securities from developed markets around the world. And the top 5 holdings are Marathon Petroleum at 0.65%, so we're seeing much lower percentages here. And then AT&T, then Gilead Sciences, and then Verizon Communications, and then CVS Health Corp at 0.55%. And then the 5-year return for VVLU was 7.26% per annum, which was split between capital growth and dividends. Now I bet you're wondering, because I was too, what were the worst performing exchange traded funds for the year so far? So let's have a look at those quickly. So coming in at the worst, we have LNAS with a loss of 64.69%. Then GGUS with a loss of 45.63%. MKAK with a loss of 40.92%. The Asia ETF with a loss of 38.97%. Then RBTZ, it was down 37.35%. And then we have IZZ, which was down 34.63%, and then FANG down 32.84%. And that's it for today, so thanks for listening. Don't forget to subscribe, and you can also find me on Instagram and Facebook.